Zain, you are on mute. Did you say something?
Yeah, we're starting.
Okay, thank you. So, we are seeing people joining. We will wait for one more minute. Assalamu alaikum, everyone. Thanks for joining us today. We just wait for a few more moments before we move into the session. We take this opportunity to thank all of you who are joining us on this call. Welcome to all of you. Without further ado, I like to welcome Dr. Neil to share some thoughts as well as open the session. Dr. Neil, over to you.
Thank you very much, Phoebe. Let me start off by thanking all the panel members to actually taking time out of their busy day to participate in this conference. I know from my point of view, it's going to be extremely interesting because I think it's a study field that half the world knows very little about. And so I think it will be very informative. So please allow me to thank them once again and thank EIBFS for hosting this panel. Phoebe, please go ahead. Thank you.
Thank you, Dr. Neil. So thanks everyone for joining us. We will be seeing people joining in the next few minutes. I am happy to invite all of you on this day. I hope all of you are doing good. So as we always do, please feel free to use the chat option as well as the Q&A option to throw in your thoughts and questions to the panel members. And we are very honored and privileged to have a rich panel. We have, first of all, let me start with Yusra Abdul Ghaffar Baki. She is the Senior Vice President, Marketing, as well as Corporate Communications, as well as Chief Happiness Officer for Afaq Islamic Finance. She also worked as Ambassador for United Nations Economic Council, Social Council. Yusra also was Senior Vice President and Head of Branches for Islamic Banking and United Arab Bank. She also have extensive experience with respect to Islamic product development, branch banking, profit center management, business development. She's often quoted in various news outlets. She started her career with Commercial Bank of Dubai. And we also have, for example, her experience as a trading manager, and she was also heading Islamic banking at Mashreq, and then later moved to Abu Dhabi. So a very rich experience we can see here. So welcome, Yusra. Thank you for joining us today. Do you like to add any few words, please?
Yes, thank you, Phoebe, for beautiful introductions. It gives me a great pleasure today to be here in the Web Conference. And thanks a lot for Emirates to host us today, Emirates Institution for the Bankings in the to host us today. It's my pleasure, and thanks for the panel for sharing the beautiful information together today. And I'm very happy to be here. And thank you so much for this introduction. Thanks a lot.
Yeah, thank you, Yusra. And next, I like to invite Paul McWhitey. Paul is from the legal profession, and Zain, you can just focus on Paul. It will be helpful. Yeah, Paul is a banking professor, and he is head of DLA Piper, one of the leading legal firms, and practicing on the Islamic finance side in the Middle East. And he has been in UAE for more than 17 years with significant experience in advising. You will be hearing him in various news outlets like Dubai Eye and other media outlets often with respect to his perspectives and views. He advises financial institutions, corporates, SMEs, developers, funds and asset managers, regulators, and other government entities. Paul, did I miss anything? Please, you can share some perspective from your side on what you do.
Thanks, Phoebe, for that very kind introduction. Just to say thank you again for having me today, and very much looking forward to an interesting discussion with a very distinguished panel. So just to say thank you.
Thank you. Thank you, Paul. And now I'd like to welcome Mr. Musa Khoury. Musa Khoury is head of internal Sharia audit with Dubai Islamic Bank. He's currently head of Sharia and a member of Sharia Standards Committee reporting to AOFI's Sharia Board. He is also a member in the Fatwa and Sharia Supervisory Board of Amlak Finance. He has founded the Sharia Departments Forum, the first of its kind in UAE, where Sharia departments of Islamic Bank and financial institution UAE discuss the practical issues of their profession. He holds his master's degree in Islamic law and legal theory. So we get a Sharia perspective from Musa Khoury. Zain, can you focus on Musa Khoury? And I'd like to get some perspectives from him. Musa?
Thank you very much, Phoebe, for introducing me. It's my pleasure to be amongst a great selection of panelists and with a great audience as well. I look forward to a very fruitful discussion and to learn from the other panelists as well. Thank you very much.
Thank you, Musa. Thank you. Thank you very much. Now, we have with us Mohammed Khumri. He is Assistant General Manager and Head of Consumer Assets Business. Currently, the name of the organization is Samba, but recently you might have seen that we have a new name, that is Saudi National Bank. So we have very senior expert who has been working in the region for almost 23 years on consumer and Islamic banking experience. So prior to joining Samba, he was head of retail banking assets, liability, cards, business, analytics, MIS at Rak Bank. He managed a consumer asset portfolio of considerable size. And he was before that with ADCB. And he has been with the Islamic banking wing of ADCB since 2004. And prior to that, he was with ICAAP Bank back in India. So he has been into the executive roles for a long period of time. So from 2002, he was in the GCC, so very rich exposure. We welcome Mohammed Khumri, Assistant General Manager, for the session. Mohammed, we like to hear from you. Few words. You are on mute is the normal word, so you have to unmute. Can you unmute, Mohammed?
Thank you for inviting us, and I look forward to some healthy discussions. And it's a session where we will all understand more about the various aspects of Islamic banking and how things have progressed over the last many, many years. It's a lovely panel, and I'm sure that in the process of these discussions, we ourselves will get largely educated by the various thoughts that will flow around this particular session. Thank you again for having us.
Thank you, Mufaddal, for joining us. Now, I'd like to welcome Dr. Sabahuddin. Dr. Sabahuddin heads the Islamic Banking Learning Division within the Emirates Institute for Banking. He's a thought leader on Sharia principles as well as concepts on AOFI. Many of you might have heard and understood and learned from his on the various practices of Sharia within the Islamic banking function. He has helped to collaborate with a lot of international institutions in bringing in various certifications and was advising various institutions in the region to help them to bring in the Sharia concepts and Islamic finance principles, not only in the region, but also in other parts of the world. So it is an honor to welcome Dr. Sabah to moderate the session for all of us today. And before handing him over, I just like to also welcome Dr. Allen to share some a good and positive news which we had yesterday, Dr. Allen. It will be a great privilege if you can just highlight the good news of which we received yesterday. Before we leave.
Okay, good morning, everyone. Thank you all for joining us today. It's a pleasure to host you all today. Thanks to the distinguished panel of experts, and I'm sure we'll have a great discussion today. And the good news that Mr. Phoebe was just referring to, EIBFS has won the Dubai Quality Award, which I'm sure all of you are aware of. So EIBFS is the only winner in the education-related category in the very prestigious Dubai Quality Awards that was announced yesterday. So we thank all the banks for the support, and we look forward to the continued support from all of you. Thank you so much. Have a great day.
Thank you, Dr. Arun. And one more information. Thanks everyone for joining. Without your support is our energy, and thanks for coming back again through our learning conversation always. And feel free to put in your thoughts. So I will just ask a question. How are you? As this is to the audience who are joining us. We have almost right now 73 people from different parts of the world joining us. And where are you joining from? If you can put it in the chat, that will be helpful. And throw your questions in the Q&A or in the chat. Feel free. We will be in the background taking it based on the time availability. Over to you, Dr. Sabah.
Good morning, everyone. So welcome everyone for the program. I will not take much time because already we have good introduction of all. I will just start the proceedings. My first question goes to Mr. Musa. In the development of new Sharia products, innovation is critical. What are the major challenges that the Islamic finance industry faces in meeting regulatory and compliance requirements on the one hand, as well as Sharia compliance requirement on the other? We welcome your inputs.
Thank you very much, Dr. Sabah. It's a great pleasure to be amongst you, and thank you for asking me this question. My views on balancing between regulatory and Sharia perspectives is quite, intensive and detailed, because we are witnessing great changes in the regulatory perspective with the introduction of the Higher Sharia Authority at the central bank and the new regulations and resolutions that have been issued. Having said that, this means that we are now in an evolvement stage where regulations and Sharia compliance are coming hand in hand, with the HSA coming into the picture. We are really finding a big level of convergence between the two. Sharia compliance is now being a main agenda of the central bank. And I would say that Islamic banks in the UAE have not experienced such challenges, which in my views are very healthy, because in the past, Islamic banks for the last 35 years or 40 years have been working in a very, let's say, flexible way, maybe a bit liberal in some cases, where there were not much, let's say, restrictions except from their own Sharia boards. But now we have above our own Sharia boards in Islamic banks, we have a Higher Sharia Authority which have introduced many conditions and stipulations, which is again very healthy. Above all is the IOFI Sharia standards, which have created some level of assurance, which is also considered as a constraint for the business side of the banks. And this have created some, from one side, some hiccups, but from another side, a learning and growth curve that is much healthier than, not having those things. So alhamdulillah, product development is going on, but at a slightly slower pace, which is very healthy, and it is picking up again. So it's just a learning curve that has gone through and it's picking up again. Thank you, Dr. Sabah.
So thanks, Mr. Musa. My next question to Ms. Yusra. She is in happiness section, and she works a lot with marketing, with the customer satisfaction. now we have around 20% of Islamic banking penetration in the market. According to one survey, around 55% of UAE banking population, they have one Islamic product, at least. So my question is, what are the major challenges the Islamic financial institutions are facing in terms of customer relationship? For example, product offering, customer satisfaction, and what Islamic banks can do better for customer happiness, and how the technology can help. Because one of the main problem in Islamic product offering is time taken, more procedure, that affecting the marketing, that affect the customer satisfaction. So how you suggest, what's your inputs in this topic?
Sabah Ad-Din, thank you for this good question. Actually, just to speak about the customers, from my point of view, I'm going to talk more about the customers' needs. So when we focus about the customers' relations and what they required, the biggest challenge we are facing nowadays, how to fulfill their needs. A part of our goal was been here to focus more on the customers' valuable needs in a way which is how we can implement regulation of the central bank for the rules and regulations and the standard service for the customers by the transparency or timely or clear, understandable manner. So we are in compliance with central bank regulations, the consumer protections regulations and standards, which is like a high level of objectives attend to ensure the protection to the consumers' interest and fulfill their needs, to introduce more products which meet the Sharia requirements is different than the other banks. So when we produce or when you launch a new products, it must be aligned with the Sharia compliance. So here is the challenge coming to us. So how the Sharia compliance be in line with the customer satisfaction? And the product should be exactly what the customers need, especially we are in a community more as Muslims. So they take care as much about the halal and haram. So we should be very careful when we're launching any new products or launching any innovative products, that the process, technology must be match the customer's needs. At the same time, we have established kind of a robust Sharia board in our departments, internal Sharia departments. The supervisory Sharia boards, they take care of every aspect of the products we launch, every details for each products. At the same time, we are looking at so much like alliance with the regulations and laws with the central bank, which protects the consumer. There's different kind of pillars. We have launched it, especially we have launched something called the customers guidelines pillars to have a best experience to the customers. The challenge here, how to match all those kind of pillars, regulations to the customer's needs. Then it should be all under Sharia compliance. Here is where we come here. So we have to launch to be more innovative, to be more active, and to be more fast in the technology environment. Because the conventional side, it's moving very fast. We in Sharia or we are Islamic banks should follow this kind of fast moving. So here where we come. So we have to be very fast and innovative, technology, how to catch up with all these things. So here is where we have to be more faster, innovative. So we have to have more kind of customer experience guidelines. We have launched different kind of pillars like know your customer, be more like efficient service, be more transparent, be more financing made accessible. Same thing with the Sharia compliance product and services, outstanding customer service. When we reach the outstanding customer service, here will come the happiness. We can make them happy. When we reach that level, how the customer can be happy from my service, products, innovative, which fulfill his requirements. I should look to that part. Customer satisfaction is it's very hard. It's very challenging because his needs must be taken as the first number one. It's not the bank interest, it's a customer's need. So here comes our challenge that what he needs, I should advise him. What the customer wants, I should work in that kind of innovative system. We launched lots of kind of technology system process for the customers, but from my point of view, I should look to the customer's needs, what he wants, what makes him more happy, what makes the customer feeling better when he go with this investment or this products, if this credit card match his requirements, or is it match with his needs for his family? So lots of campaign and products and promotions we are running should be all under the Sharia compliant. That's what we are doing nowadays. But the challenge here, how to be aligned with innovative and technology and all these things. Thank you.
Thank you very much, Ms. Yusra, for your thoughts. So it is the right time that we focus a trade-off between marketing, customer happiness, Sharia requirement, as well as business requirements. We hope that after new development, after the introduction of more fintech, and also from the guidance from the higher Sharia authority regulations, we will be successful in achieving this goal. My next point, I refer to Mr. Mufaddal. Mufaddal is having good experience from conventional banking, Islamic banking, a window system. That is, he worked with RAC Islamic, both. Now, my question goes to him now, that Islamic finance role is a responsible and ethical finance role. There is something related to, we can say the world is changing, regulatory requirements are changing. In the meantime, the basic philosophy of Islamic bank is also very important. How you think that how the Islamic bank can achieve these goals, especially once we are going for technological change, regulatory requirement change, in a conventional banking setup, in Islamic banking setup. So what are the challenges you face, you think that Islamic finance industry is facing nowadays in this complex scenario?
Thank you, Dr. Sabah, for the question. Well, let me start by saying that our perspective of Islamic banking, many a time when we talk about it, is extremely limited to the Middle East. Right? What we fail to understand is there is a large world of Muslim countries outside the Middle East where unfortunately Islamic banking has not yet penetrated. Right? Out of the nearly 1.7 to 1.8 billion unbanked people in the world, 50% of these are from Muslim majority countries. So basic banking has not yet penetrated into these countries. And I think that's where many of the banks in the Middle East plan to play a pivotal role in trying to reach out to people in these countries, and not by the brick and mortar model. By trying to use technology to reach out to these countries, trying to set up digital entities that could enter these countries, try and bring about a change in the way, I would rather say democratizing financial reach. More people can start getting access to financial instruments, more people getting access to payment instruments. And a lot of these countries, the penetration of the internet is not very high. So it is not necessary that we use internet alone to reach out. In many of these countries, the mobile phone, which is not the smartphone, has made huge rapid progress in terms of how payment technologies have gone into these countries. And why I say that is, it is very essential from a socially responsible part of it. You see, Islamic banking has a larger role from an ethical perspective that try to bring more and more people into the sphere of banking, so that a lot of issues that we have across the world where people don't have access to finance comes as a cropper. Now, let's take the case of, Uberizing banking, as I call it, right? Can you Uberize Islamic banking? Can you start a sharing economy in Islamic banking where people get access to these products at a much more lower cost, right? Whether they have access to financing products at a lower cost, whether they have access to lower fees on Islamic products. The answer is yes, that can happen. And that has to happen largely because there is a lot of pressure, competitive pressure on pricing, more products being available at cheaper rates, more products being available at a competitive pricing rate to try and bring about this phenomenal push that we want to see in many of these geographies where it is not available. Now, having said so, you also asked me about how can this entire aspect be ethical in its aspect, right? So I think today, if you look at it, it's a materialistic culture that goes out. Banks are forcing people to lend more, create more. There is also the aspect of more and more larger banks coming out. Now, do you actually need larger banks? My question is what the need of the hour is small community banks to be developed on the Islamic principles, small Sharia compliant entities. The recent step that the Central Bank of the UAE has taken, where they have allowed community banks to come up with a capital of 300 million, I think that's an excellent idea. Not only the UAE, but across the world, we need these small community banks to come up, which are fully Sharia compliant in their nature, which are socially responsible. They do not go out and talk about profit being the motive of them being there. Their motive is to set up an Islamic foundation, which will try and bring about a change in the people's lifestyle by making things accessible to them. I personally am against these large mergers and creating large entities, because from a social standpoint, many people lose jobs, many people lose out opportunities, whereas small banks, small entities, whether they are digital, whether they are physical branches, physical setups, will bring about this change across the world, especially in Muslim majority countries, especially in those nations where banking is not yet prevalent. So that's one aspect that needs to be looked into. We need to breed smaller entities, nimble, give them technology, democratize it, and try to lower the cost of financial services to people at large. From a Sharia perspective, it's pretty easy to try and bring about these changes, because the scholars have many a time said that community service is a great motive in Islamic banking. Try and reach out to the dispossessed. A bank generally lends to a person with a very great credit rating. It lends to people who are good. But where is the bank lending to people with low credit rating? Where is the bank lending to people where the risk is high? When the risk is high, your returns are high. That is not what Islamic banking will do. We need to lend to people at marginal rates, even though the risk is high. That by creating a confidence in the person that he is provided financing at rates which is measurable for him, which is manageable for him. Profit should not be the motive of these small banks. That's all I have to say, Dr. Sada.
Thank you very much, Mr. Mufaddal. Time is running fast. I am moving to Mr. Paul. Mr. Paul is a lawyer. He is a practitioner. He did a lot of contribution to the Islamic finance legal dimension, giving opinions to different product structures and other. My question to Mr. Paul is that now Islamic banking has a global reach. How the disputes, legal issues, when arise out of the Islamic banking area, how the universal code or the global code or the global legal system contradict with the Islamic system? Do you need any global code for Islamic products? What the Islamic finance products facing the challenge when a jurisdiction is different? Especially, for example, if you see only the UAE, we have DIFC jurisdiction, we have the mainland, so a common law system, then Sharia law, then legal. How these all challenges Islamic finance industry face, and how the Islamic finance industry encounters these challenges?
Thanks, Dr. Saber. I think that's a great question. I mean, it's also a very complex question. And I think in order to explore it and try and answer it, because of course, depending on who you speak to, their answer will differ significantly to what mine is. But I think fundamentally you have to take a step back and put the question into context and talk about globalization. I mean, I heard a statistic last week that over 46 countries around the globe have taken steps to change their legal and regulatory frameworks in order to embrace Islamic finance and level the playing field for Islamic financial services and Islamic products. And I think that's fantastic to hear that. But it does go to the crux of your question, Dr. Saber, which is how do you then approach disputes? How do you come up with a global solution here? And again, the Sharia backdrop to this is that, of course, there are different schools of Sharia thought. And within those schools of Sharia thought, of course, a number of different scholars who are active within the Islamic finance industry who have their own different interpretations of the structures and products. I think, you know, the other component to it is to go back and look at what we've done so far and how the industry has developed so far when it comes to dispute resolution. And bearing in mind that I look at this more from a wholesale kind of commercial banking perspective as opposed to retail consumer facing, I think it's fair to say that, you know, the Islamic corporate banking or wholesale banking industry has developed on the basis of a series of products which are to a large extent designed to reflect the economics of conventional financing products. And I know that a number of the participants on this call would like to see the industry doing more to develop its own products. But, you know, the history is that, you know, conventional finance has to a large extent been the benchmark. To a large extent as well, these products are asset-based as opposed to asset-backed. Now, what do I mean by that? Well, assets are involved in the process of structuring, but they don't actually form the basis of recourse if something goes wrong. If something does go wrong, it will be largely a contractual claim for a debt in the same way as you see in conventional finance. And therefore, the lawyers, the structurers involved have effectively gone back to the position of looking at what, you know, the conventional finance industry has done in terms of resolving disputes. What does this mean from a Sharia perspective? This means that Sharia's role in a lot of these transactions has been more in the structuring, the documentation, and less so in the actual ongoing regulation of these contracts. So an Islamic contract, once it's been executed, will have a very similar dispute resolution provision to what you see in conventional finance. You have a predominance of English law governed contracts with submission to the English courts, arbitration, whether that's LCIA arbitration seated in London, or more recently DIFC, LCIA arbitration seated here in Dubai or the DIFC, largely because, you know, English law in particular offers a great degree of certainty when it comes to Islamic financial structures. There have been, over the course of the years, a number of landmark cases, Shamil Bank and Bex & Co., the investment Dar and Blom Bank, and also more recently Dana Gas, where the English court has taken positions on those cases that has given investors, financiers, a good degree of confidence when it comes to disputes around Islamic contracts and in particular points of Sharia. So where does this lead us all? And this is really the crux of this question. Is there a wider role that Sharia should be playing in the ongoing regulation of these contracts, and in particular through dispute resolution? Should there be, you know, specific arbitral tribunals or reconciliation or mediation committees that are set up who consider these contracts more from a Sharia perspective and perhaps less from an English law or New York or other law perspective? Well, I think you've got to look at this on a case-by-case basis, to be frank with you. I think it boils down to an analysis of, you know, the jurisdictions involved in a deal. You know, we have a lot of cross-border financing deals where, in particular, English law provides a very good solution for the main financing documents. But when it comes to the security involved in a transaction, then you may well be looking at local law security documents with their own local court-enforced dispute resolution process, for example, for a real estate mortgage or a share pledge, to give just a couple of examples. So it is a very, very complex question, and I do think that, you know, there will be areas where, you know, dedicated Sharia committees, whether that's in the form of arbitral tribunals or whether it's mediation, can play a greater role in the process, and I think that can complement what we already see out there in terms of, the approach that people are taking towards dispute resolution more generally. But I think it does require a push from the stakeholders within the industry. I think it does require a greater level of standardization and a push for more codification on certain points of Sharia. And I think all of that, as I say, will lead to a greater level of confidence in the development of these dedicated tribunals. Thank you, Dr.
Thank
Sandip.
Mr. Paul for all your inputs. So I will come back again with one more question to you later part of the discussion.
Okay.
My question goes to Ms. Yusra now. Ms. Yusra, again, coming back to customer satisfaction and customer happiness. I just have one important input that one common misconception about Islamic finance that it does not embrace cutting edge technology. To adopt a new technology is not a very welcome move. It is a misconception or conception about Islamic finance. Obtaining Sharia approval from board, from regulators is taking time. So how can Fintech transform Islamic finance, particularly in the period that we are facing now, the post-COVID-19 period? Just comparing conventional banking, Islamic banking, a window system, financial or investment product like AFAQ is offering. So how can we face this new challenge post-COVID?
Yes, of course. Actually, Islamic banks or Islamic institutions, as I mentioned earlier, we face a great challenge regarding the harmony between the technology developments and also the Sharia standards, as I mentioned earlier. But this never prevent or stop them from finding appropriate solution to solve all these kind of challenges. But on the other side, all Islamic banking have distinguished themselves in many fields and have proceeded and different kind of they have did some different kind of traditional way, but it was very innovative technology in several aspects. Like you can see, we have been example to the other different kind of institutions. And yes, I can agree with you. The Sharia approvals may take a little bit of time to solve or to give any solution for any products. But on the other side, especially for the new ones, but this will protect us as Islamic banking to be away or to prevent us from the mistakes, because it takes time for approval or to get the Sharia compliance products, but this will never stop us to be innovative. Yes, it takes time. That's the only things, and we have especially to issue for our repetitions as Islamic institutions for innovative products, we should take some time, yes, to get done with our Sharia compliance product innovated in the market. And mostly I can tell you that we have as a customer satisfactions, they're always looking at us how to be as a remarkable, innovative institution products and resolution for the customer. And I can tell you that we have done a lot of appropriate solution for them. Especially, we have linked with different kind of technology, to find out how to be more faster in the processing, such as credit for the customer. So we have linked with different solution company technology to be more innovative in the market. So the customer apply for any request from his side, we instantly can support him and give him all the support immediately. Also, we have done something differently with different kind of institutions internationally as technology, where the customer needs to have his own request to be online. So it comes as an application in the phone. It's very easy, and we apply everything in the phone, and it comes very, very, very soft solution. And when the customer apply for the loan or for any kind of card, whatever he required, we give him instantly approval in the spot with a high technology and with that kind of Sharia board approval. So there are the different things we are looking at it to be more innovative in the market, linked with the national global innovative technology. But in the end, we cannot go far from the Sharia, always with us, supporting us to be in the line, especially we are in the country who look at who's so much into halal and haram, and we have to be very much careful of our products and how we launch the products and how to satisfy the customers when they're needful. And here's where we have to avoid the mistakes. Sometimes we have to be very much into high repetitions, especially Islamic banking. Sharia compliance must be always in the first lines when we launch anything in the market. Thank you.
Thank you very much. My question now with Mr. Musa. Now, Mr. Musa, we are in more than 4 decades of modern Islamic banking. So there's no much excuse that we are new in the industry, We got enough time to evolve, to develop. There's a misconception, or you can say feeling in the market, that Islamic banking is just merchant banking. Less innovative product, less product offering, similar product that are offered by conventional banks, similar rates, just like changing the face. What do you think that there's a right time that we need to change the face of Islamic banking? Or you think that Islamic banking is doing well and no need to change? Or the overall face should be changed from a pure merchant banking to more advanced or innovative product offering to take a challenge, to give new dimension, new face to the industry? Your input, please.
Thank you, Dr. Sabah. Appreciate this great question from you. In the age of industries, throughout history, industries have gone through many phases. Phase of inception and the stage of, we can say the toddler stage, where an industry starts to benchmark itself to other close industries. Then with time, the industry realizes that its identity couldn't be established or cannot be established except if it let goes of any peer benchmarking criteria and start to establish its own face, its own identity, its own way of doing things. And I would presume that Islamic banking now with it's touching now the 50 years of age, is really now enjoying the time of starting to build its own identity. Benchmarking against the conventional was a phase that was a must, and we couldn't have skipped it. But I think today we are mature enough. What Paul have said, 46 countries are now studying their laws and regulations to welcome Islamic banking and finance to play in their markets. Again, this is a big indicator that Islamic banking is now at a good maturity level of starting to think again, how can it build its unique self, its unique identity, I would say. Identity cannot be established by benchmarking with another industry, although it was a good stage, a stage of following. Now we are in a stage of leadership. We are in a stage of establishing our unique self. And in my opinion, this cannot be done except with three main pillars. There may be others, but these are the 3 main ones. We should go back to ourselves and our big goals that Shari'ah came to establish through the financial sector, what we call maqasid al-Shari'ah. And a lot of those of the maqasid al-Shari'ah, the goals of Shari'ah in the financial sector, are well defined in the Sustainable Development Goals of the UN and in the ESG standards. So I think we can align well with those currently available and accepted standards that are there in the market. The second pillar, in my opinion, is the business models that we have introduced. We are so far very, restricted in the commercial banking model. While there are many other models in the market, the fintechs are now coming. Investment banking was there since then. Other business models, the crowdfunding and others have also been established well before. We should, for every vehicle, for every product, there are different business models that suit it. I'll give you an example. If we speak about the Mudaraba contract, which is a very well-established contract in Sharia law, although it is used very much in the commercial banking sector, which is fine, I have no objection on this. but it is a more it fits much well with the investment banking nature, because it is a product that entails a lot of risk against the big returns that should come through Mudaraba. It's not a credit risk-based product, it's more of a investment risk-based product, which entails a lot of risk that the investor should in the first place be aware of and then accept to take. Having said that, the third pillar, and I'll end by this, is to explore new products that are originally homemade in the Islamic financial sector, not borrowed and then I mean, we put some maybe cosmetics on it to make it look Islamic. We should think from within, what are those products that if we launch will be recognized by the market that these are internally made and they are homemade within our own industry, rather than building on what is there in the market. This by itself is, I mean, those three together, but you can see very well that they are at three different levels. The goals come first, then the business models, which is at institution level, comes next, and then the last one as product level, which will be offered to the masses, is what is at the forefront that the customer interact with. The more unique, the more we are based on our own principles and ethos, the more that we will be able to create our own identity going into the next phase of growth and identity. Thank you, Dr. Sabah.
Thank you, Mr. Musa. So time is running again very fast. I request all my participants to keep your questions ready. In the last 30 minutes, we will forward your all in questions, your comments to the panelists, and they will address your all queries, your concern. My question to Mr. Paul, this is little technical aspect of Islamic finance. That in recent period, we have some new development regarding financing, especially with reference to the Sharia standard of Awafi of standard number 59, that is sale update. I found some question also raised regarding it. How you think that, especially in case of Murabaha financing and restructuring updates and other, how it will affect the Islamic finance industry in case we are facing default and other cases nowadays? So little technical question, but some of our participants, they want to know about it. I will also come to Mr. Musa about this from the Sharia aspect of this new development. First, Mr. Paul, regarding the legal aspect.
Thanks, Dr. Sabah. Well, look, I think I like to look back to 2008, for example, where to touch upon the point that Musa has just made about Mudaraba contracts, AOFI and a number of prominent scholars within AOFI decided that they wanted to make a clear statement as to the use of Mudaraba, Musharaka, Wakala, and other non-debt type Islamic contracts in the context of how they were at that time being used in the Islamic finance industry. You had a number of sukuk structures, for example, which turned Musharaka, Mudaraba, and Wakala contracts into more debt-based instruments where, you know, as we all know, these are traditionally not debt contracts. They're contracts which promote risk sharing. They're contracts which look at investment. And the response in 2008 was very encouraging in that the industry, you know, took on the challenge and innovated and came up with other structures which were acceptable to those scholars and which are acceptable within the parameters of AOFI Sharia standards. And I think what we're seeing today, in particular with Sharia Standard 59, is very similar to that. We're seeing, you know, an area that has been identified by a number of prominent scholars as being an issue for them. And, you know, those scholars are prominent across a number of Islamic banks, not just here in the UAE, but also the wider GCC. And the industry is responding to that challenge by looking at changing the structures, in particular commodity murabaha-based structures or tawaruk, in order to accommodate those concerns. I mean, I'm working on transactions at the moment where exactly these issues are being addressed through structuring and documentation. The other point to raise as well is that, of course, it's not just the challenges of meeting Sharia requirements, AOFI standards in particular, but also broader challenges to the industry. I mean, LIBOR and US dollar funding in particular are prevalent throughout the industry, and as many of our participants will be aware, LIBOR is transitioning and will be phased out, I think, during 2023. And LIBOR, as most people will know, is a forward-looking rate and is therefore, perfect for the Islamic finance industry when it comes to setting the profit on a murabaha contract, or for that matter, setting the rent under an ijara for the next however many months. The move now will be to risk-free rates, which are backward-looking of their nature, which of course itself also poses a challenge for in particular, murabaha and ijara products. And again, that's something else that the industry is responding to at the moment. We've got, a number of bodies across the industry, in particular, IIFM, who are based in Bahrain. We, of course, have the highest Sharia authority and, the Islamic banks that are based here in the UAE as well, who are all working collaboratively and collectively towards, innovating and moving forward with the industry.
Thank you very much, Mr. Paul. Yes, Mr. Musa, can you please share some views regarding the Sharia aspect?
Sure. Let's put first things first. When Higher Sharia Authority came, when AOFI came to set the standard 59 on sale of debt, the main aim and objective of this standard was to not make banks prevail form over substance. They didn't want banks to do the prohibited acts of usury and interest in the name of Islamic banking. And they have seen in the market there was a trend of rolling over some debts making some transactions based on commodity murabaha, where they transfer debt into assets and then back into debt again with a higher rate of return, which is, for the one who will see it from a very legal, when I say legal, I don't mean the law part. In Sharia, there is a goal element and there's a legal element. The legal element in Sharia are the contracts that are signed. The contracts that are signed are totally fine. All conditions are met. All imposed and stipulated, the terms are there. However, collectively, when we see things from outside, when we see things from a bird's eye view, we can see things that are not going in the right direction. There's something fictitious that's happening. And the outcomes are very similar to loan with interest. So what AOFI wanted to do is that they wanted to keep some room and space for banks to have let's say the outcomes that they want to reach to, but not to the extent that they are more or less the same as their conventional counterparts, as Islamic banking have emerged and come into existence with the flagship that they should be away from interest and usury, which may not be the case if we start circumventing and bypass the big outcome picture through sale of debt. So just in a summary, I don't want to take more time. The standard have put many conditions, which today's conference may not be the right forum to speak about each and every condition, but the conditions are all set in a manner to avoid having a Sharia compliant legal, from a legal perspective, transaction, but a Sharia repugnant transaction from an outcome, from a bigger perspective and the bigger picture side. Thank you.
Thank you, Mr. Musa. Now, Mr. Mufaddal, I just want your attention, please, regarding your experience in the window system in a different, coming from a conventional than Islamic. and then what we are facing now, the challenges for the industry. Where you think the Islamic industry will go ahead? The same question I asked to Ms. Yusra, I am also forwarding to you in the post-COVID situation, in a changing scenario when we have more regulatory requirement from central bank regarding the Sharia compliance after high Sharia authority. So where the industry will head in the future? What do you think about the challenges that industry is facing in terms of technology, in terms of fintech development, customer satisfaction, and selection of the asset? Actually also very important, because we are having more green finance concept. I just covering all topics so you can have an idea what type of asset we can focus on more in Islamic finance. That is also the main philosophy of Islamic banking. That is the development of the society.
That's a very long question. I'll try to
Yeah,
be
just
brief.
I put all point to you.
Yes.
Yeah.
Now, you know, Brother Musa mentioned very well that there are three pillars on which he foresees Islamic banking to progress in the coming days. I would further add to that and say I also see three pillars in financial balance. I will talk about these three pillars on which I believe the future of Islamic banking and the technological changes that we are to foresee depend upon. The first is liberty. Now, in a financial parlance, liberty stands to choose alternative payment and financial platforms. So that's what Islamic banking will provide to people at large, an alternative mode to a conventional product. And as Brother Musa correctly pointed out, it is time for us to stand up, look behind and say the past is the past. We spent 40 years trying to mimic conventional banking. Is it the right time for us to go ahead and do things differently? The answer is yes. If, as Paul did point out, that when you look at the new standard 59, where it talks about the rate part of it and say we look at backward looking rates, the rates. Now, what I foresee is what's the harm in that? EBOR and all of these are forward looking. Maybe it's time to go backward and look at the rates and try not to be lessen the rate arbitrage that we've always been doing for years together. It's a different way to do things. Maybe it's possible. The second pillar is equality. Equality refers to the ability from people of all stratas in our society to access financial services. Credit rating not being the only benchmark. The ability to lend to the rich is there, but where is the ability to lend to the underprivileged sections in our society? Right? That is a need. Now, you can be different. Maybe you don't do much of product innovation, but why can't you do social innovation? Why can't you get into those countries where it's difficult to lend to these poor people, bring about a change in their lives? I would say, honestly, the poor are more honest than the rich. Globally, some of the biggest scams have been the responsibility of the large corporates. Individuals, poor individuals, I don't think they do scams. I don't think that they go out and loot institutions. So that's an impact of Islamic banking. The last point of it is the fraternity. Why can't we create a fraternity of Islamic platforms globally, which will depend upon each other, link with each other, and try and provide a financial landscape across nations, across boundaries to benefit? They could be payment platform, they could be lending platform, they could be credit platforms. So these are the three important elements. Financial inclusion, you spoke about green. Now, a green economy is great. We do lending to projects and to industries where they are not harming the environment. Now, for me, green financing is largely financial inclusion. Are we including everybody? Is the lending equitable? Are we creating an equitable banking platform? Are we creating an equitable financial landscape where we rely less on greed and more on ethics? That's where it will go. And fintechs will play a role in this, sir. If you see the cost, because what do fintechs do? They provide the role of intermediation. They're intermediating. Now, when somebody is intermediating, the whole purpose is to bring down the cost and to provide services at a lower cost. So fintechs, to a large extent, even Islamic fintechs globally that are being set up across not just banking, in many other industries as well, aim to try and lower the cost of a transaction to consumer. Now that's very useful. So that's the future where it lies, lowering the cost of a transaction so that it is available at a more economical rate to the individual at large. And I think you asked me some more questions. I'm not able to recollect all of them.
No problem. Thank you very much, Mr. Mufaddal.
Right. Finally, there's just one point I'd like to make before I end. You know, we generally should remember that Islamic banking is moving out from its years of playing second fiddle to conventional banking, largely because all of us who have been a part of this industry were from the conventional setup. So our DNA is conventional. We haven't started thinking in a different way. And we unfortunately cannot, because the burden of being a conventional banker is too much upon us, and hence we refuse to see. But the new generation that is to come, they will look at things differently. I think they will interpret the Sharia in a much more better way than what we have been interpreting for years, because we've been bogged down. So finally, I would say vision is the art of seeing what is invisible to others. And that is precisely what Islamic banking will aim to do in the coming years and the generations to come. Thank you.
Thank you very much. The time is, sorry for the, it's okay. The time is for our Q&A, because without any further delay, I will start. There is one question. I think Ms. Yusra can respond to this question. There are three parts of it, but I will take only one. How does Sharia governance affect investor decision regarding their investments in Islamic banks?
Yusra, you are on? Yeah.
Yeah, I'm on, yes. Thank you for the questions. I think, yeah, the Sharia should be involved in each particular regulations. We had a department of Sharia. They take all this kind of concern and this kind of aspect and investment products to the Sharia board for their approvals, because it goes through a different kind of process and formalities and regulations. Once we launch this kind of investment, so the governments must be going through this kind of regulations and governance aspect to for the products to go through. Once this goes under all these things, formalities, then we can launch the product. So we have to be more innovative in those investment which match the customer's needs and requirements. So based on the Sharia boards and Sharia compliance, they can give us the kind of advice how we can go through it and how we can launch it. And of course, there is different kind of process. We have a products team, we have development team, we have Sharia board team, we have Sharia department as well to look at after those kind of aspects. So I think to launch any kind of investment to satisfy customers should go to the different kind of procedure for approval or for regularity. Then we can launch this kind of innovative products. I think it's clear.
Thank you, Ms. Isra. Thanks for your inputs. There's many questions regarding the Sharia aspect. I think Mr. Musa is the right person here. About digital banking, digital currency. Can you shed some light on it in an overall view? Is Islam is against the digital banking?
Thank you, Dr. Sabah.
Yeah.
Let us just go back to history a bit. At the era of the Prophet, peace be upon him, Muhammad sallallahu alaihi wasallam, he have accepted, first of all, the currencies of foreign countries such as the Romans and the Persian empires, and they have imported currencies in gold and in silver, and these were the two dominant currencies at that time. With time, currencies have evolved, and currencies have, in the recent history, have been pegged to oil, and although they were paper-based, but they were pegged to oil. Once this happened, people started accepting that currencies can also be something that resembles the country's government to pay against whatever is mentioned on the paper that is traded, that is used as a means of exchange. Thereafter, even the peg with oil have been discontinued, and people now entrust that those papers are a resemblance of the value of the economy and the GDP of a country, and they trust that governments have been trustworthy in printing the currencies according to whatever value they represent, and some of them are pegged to other currencies while others are not. Very recently, we have all seen that the cryptocurrencies and digital currencies have emerged. And again, in Sharia, as a rule of thumb, Sharia does not ask people to avoid involvement or avoid going to the next phase and stage of human involvement. But Sharia have big values. Sharia have general principles that we have to follow. Sharia has the principle of transparency, of fairness. Sharia has the principle of being truthful and honest, and to be clear in whatever we are transacting with. So when it comes to digital currency, as long as we are, I haven't mentioned all the values, but if we are ticking off all the values, then we should not be stopping any involvement, any development that's happening on the currency side. I'm not now speaking about any special cryptocurrency per se. There are more than thousands of cryptocurrencies now in the market, and I'm not saying whatever I'm saying in comment of any of those, but I'm saying as a principle, cryptocurrency is something that should not be prohibited just because it's a cryptocurrency or just because it's a digital currency. Having said that, even the UAE government have announced around 1.5 years back that they will have their own cryptocurrency soon as well. Thank you very much.
Can we redraft the question that use of this digital currency is not prohibited? The main concern is regarding the trading of the digital currency, because Islam is, what Islam prohibits is the trading aspect of the currencies when we are trading one currency with another. So when we are trading the digital currency, this is the main concern of the Sharia. Use of digital currency as an investment means or buying only is not prohibited. Can you clarify this?
Yes, I do share your views on this. Usage and buying in the first place of digital currencies are fine. But there are a few things to consider, especially on the trading side. So if we are trading with a speculative approach, then this by itself, even if it is trading in sugar and rice, then it is also not allowed, because the speculation in a sense is not allowed regardless the forum of speculation. The forum, be it currency exchange, be it commodity exchange or otherwise. This is number one. Number two, we can say that the ones who are indulging into the currency trading activity with no knowledge, with no awareness, are speculative by default, because they are entering the market with zero knowledge. Those who are more sophisticated investors, who are more knowledgeable on the nitty-gritties of those cryptocurrencies, or those who have at least given agency to those who know what they're doing and know more about the technicalities of the market, we can give them the advantage of doubt that they are not speculative here in intention. They are more towards the investment side of trading, which is in principle allowed in Sharia. A third thing, I'll not say more, but a very last one. Some scholars have had a standpoint that if those currencies are not issued by governments, then we cannot have full assurance on whatever is issued. And due to this lack of assurance, they have prohibited the general public to invest in such currencies, not because they are not allowed, but because the haqq, the right of having value of those currencies may or may not be guaranteed, as the issuer is not the state, it's a company. I'm not saying I'm convinced or not convinced with this third one, but it is a valid condition that some scholars have had the standpoint on.
So again, I will give one more question to you regarding the rates of murabaha. This is a practical side. I will just read the question, then I will take other questions, because two participants they asked about it. This is one regarding can we change the commodity murabaha in percentage for the facilities like finance on phones, balance transfer, EPP? Another question related to this also, to the commodity murabaha rate. So how can you address this question?
Great. I would say this question has quite a few legs to it, but mainly there are two areas we need to check. if the service offered to the customer is not purely based on refinancing or on just guarantees. There are some types of finance that are purely qard based, are purely loan based, like loan with no interest. Islamic banks has such finances and such services. If I cannot now comment on each and every one, because different banks have even different, their Sharia boards have different opinions on the underlying structure of Sharia of each and every. So EPP and balance transfer and finance on phone have different structures according to the views of the Sharia board. But as a basic principle, we can say that they are categorized into two categories. It's either a pure service where we can have a fee on, regardless how we calculate it, whether it is on percentage basis or whether it is on slab basis or whether it is on fixed fee basis. All those are allowed. However, if the fee is taken against a loan-based nature, a loan-based structure, then we can only take the actual expenses that we bear in this transaction. Anything above that will have and entail the shubha, as we say, the uncertainty of having being indulged into usury and interest.
Thank you very much, Mr. Musa. Any other questions, Mr. Phoebe?
Dr. Sabah,
yeah.
Yeah, Dr. Sabah, there is a question which Masood Abbasi like to raise. So I'm bringing him online so that he can raise it to bring in clarity. Masood, over to you.
Yeah, hi, assalamu alaikum.
Alaikum assalam.
Can I be here? Can you hear me?
Yeah, we can hear you. Go ahead with the question.
Okay, just like to know, like on the credit card, we offer some financial facilities like finance on phone or balance transfer or EPP. Some of the banks, they are charging in percentages. Like some of the banks, they charge 3% directly on the FOP or whatever, or balance transfer. Some banks, they are charging in like 250. So all you can pay is 250 for the entire amount. What is allowed here? Because we got it verified from 2-3 places. So we were not getting the approvals for the charges in percentage. Like you cannot charge the customer or in percentage irrespective of the amount, while big Islamic banks in UAE, they are charging in percentage. So what is your feedback on that? What do you say?
Thank you, Masood, for the question. Anyone
Mr.
like
Musa,
to?
I think you can address this question.
Sure.
Again.
Thank you, Dr. Sabah. Brother Masood, let me give you some examples live, so you can maybe better understand the perspective of Sharia scholars on those. So easy payment plan, EPP, is seen by scholars as a reschedulement of the installments of a currently available debt or a debt-based transaction. So for most scholars, they have seen this as a reschedulement of installments, which means that we are just delaying the payment and maybe aligning them to the new schedule, which means that it is a loan-based restructuring model, which we cannot profiteer from. Otherwise, it will be somewhat like interest. But we can take a fixed fee against the administrative costs that we have borne. However, some scholars may have seen, and maybe this was maybe in the past, I'm not sure how will HSA see this, because it may go against the sale of that IOFI standard 59. Maybe some scholars have seen that it's a rollover of the debt, and the rollover of the debt is involve a commodity-based transaction, which is the commodity murabaha, which has another percentage above the currently available debt. So I'm giving you one example. When it comes, I'll end by this. When it comes to finance on phone or balance transfer, I presume you mean to shift funds from one form to another. So let's say you have in your current account some funds and you want to have it, let's say, transferred to your credit card or maybe to your phone. Which seems to be more or less an agency agreement. Agency agreement means you are asking the bank to do a job for you, where you are transferring some amount from one place to another, and this is a pure service. There is no loan-based structure behind it. In my
opinion. It's not.
Yeah.
Sorry, it's not a loan, and all
Not a loan,
three
yeah.
are different from each other. So
yes, it's not a loan. So that's why for this one you can charge a percentage as a fee for the agency structure that is underlying the transaction. This is how I'm seeing it from my perspective. However, I cannot speak on behalf of any Sharia board.
Thank you very much, Mr.
One
Musa.
more thing, if you could allow me to ask, with regards to the cryptocurrency. All right, as you rightly mentioned, we have to have this clarity of everything and transparency. There is no source of fund in any of these cryptocurrency authorities anywhere, not the authorities, but all the companies. There is no clarity. What is the source of the fund? So if there is no source of fund, how can we even invest in it? Just like share, there is a source of fund, although you are not allowed to invest in any liquor or any ammunition kind of companies, but there is a source of fund. Okay, this is a company, they are into this say aluminium business, and they have issued their IPO, we can invest in that. But in cryptocurrency, there is no source of fund. Where the fund is coming, who has started it, how they are earning the money. It's all like a banana product. So what do you say on this?
I do apologize for my peer panelist for taking a few questions consecutively, but just quickly I will.
It's okay, fine. It's not important if there are other, I know other gentlemen, they are in waiting list.
Maybe Mr. Masood, we can come back through email. Mr. Musa, can you?
Yes.
Yes, please.
Yes.
Yeah. Because this is something.
I will in 30 seconds just share a thought, and maybe by email I can share more thoughts later.
Yeah.
The currencies currently available in all countries is based on consensus of people who are trading in those currencies and using them, that this currency holds a value. So there is no source of fund again behind it, except maybe the trust into the country or the state. So again, trust has a value in Sharia. And I'm not saying that this can be transferred, and the analogy of cryptocurrencies works here or doesn't work. I will not comment on this, but this is the perspective that scholars who allowed it have seen it. The trust element, not source of fund element. Source of fund was there when it was pegged to oil or pegged to the gold and silver. Thank you.
Thank you very much, Mr. Musa. Mr. Paul, one technical legal question for you. DIFC regulation, English law, Islamic Sharia law. Is there any contradiction? This is my question to you. A participant question is that DIFC arbitration and English law do not Sharia codification. How the past cases presented to the UK court, I think the one we discussed yesterday regarding TID and Bank Capital is one of the case in point. How the judgment been brought up? Is it based on the judgment agreement between, sorry, I will enlarge it. Is it based on the agreement being executed, or it is based on UK law that does not recognize Sharia law? So I repeat the question. DIFC arbitration and English law do not Sharia codification. This is written as I'm reading. How the past cases presented to the UK court, how the judgment being brought up, it is based on the agreement being executed, or it is based on UK law that does not recognize Sharia law. So this is a very relevant question that also focus on the global reach of Islamic finance and the legal challenges the Islamic finance industry face.
Okay, good question. I think there are a number of different parts to it. I think first and foremost, and taking DIFC as the example, I mean, DIFC has its own court system. It has its own set of laws, some of which are obviously very close to English law. Fundamentally, it is its own separate legal and regulatory environment. Now, if we look at the role that Sharia plays within the DIFC, I think you break that down as follows, which of course you have institutions which are Sharia compliant there, which have to comply with not just the body of laws relating and regulations relating to financial services set up more generally, but they also have to comply with the requirements of the Islamic financial services module as well. And of course, that introduced levels of governance, the requirement for a Sharia supervisory board, for example, or involvement of Sharia scholars or Sharia consultants, depending on the kind of business that is being undertaken. Now, that's one side to things. In other words, how institutions themselves are governed. The other side of things is how transactions are executed. And this goes back to the point that I was making before, which is, certainly within the wholesale commercial banking space, Sharia's role on a transaction has, to a large extent, been day one and not really on an ongoing basis. So the structure for a transaction will be reviewed and it will be approved from a Sharia perspective. The documentation will then be prepared. That documentation will include various points around the structuring, certain provisions which you typically see from a Sharia perspective. And then, of course, the dispute resolution provision will contemplate, more often than not, for example, DIFC law or English law with dispute resolution in the DIFC, either through the courts or DIFC LCIA arbitration. Those dispute resolution provisions will not typically mention any reference whatsoever to Sharia, because, as I said before, to a large extent, the role of Sharia on these transactions has been in the structuring and the documentation, and not as an ongoing role. So when it comes to dispute resolution, the dispute is really focused on what does the contract say and what are the claims involved. And often the claims involved will be, leaving aside the asset-based nature of these transactions, will often be straight debt claims which are brought through the courts or through an arbitral tribunal, and there'll be an award or a court order at the other side of that. There may, however, be instances where the parties do raise points of Sharia, and these are the cases that I was referring to before, which went before the English courts, not the DIFC courts. And, as I mentioned before, the English courts, in looking at these, had very closely examined the role of Sharia, its interplay with English law, and concluded that the proper governing law of those contracts in those instances was English law, and that they would, to a large extent, disregard, matters of Sharia from a dispute resolution perspective, unless, of course, they go to particular points of claim within the contract itself, and they might need to have expert evidence on matters of Sharia. Now, in that situation, the court will still apply English law, but they may well, take an expert, a scholar, or a Sharia consultancy firm, for example, to come in and advise on what the correct approach to a particular point should have been from a Sharia perspective. But this, of course, itself raises a very important point, which is that, experts' views can differ. And of course, going back to what I said before, the different schools of thought within Sharia, and within those schools of thought, scholars who have very different views on the interpretation of particular products and transactions, does make it very challenging, I think, for you to reach consensus on certain of these points. So I think for the time being, as I've said, I think what we're seeing is very much a situation where DIFC law, English law, or another set of laws other than Sharia will govern the contract, and there will be, a dispute resolution provision, whether it's court or arbitration, that offers certainty in that regard. I think there are some exceptions out there. For example, if we're talking about Saudi Arabia, the main body of law within Saudi Arabia is, of course, Sharia. That's not necessarily true here in the UAE, though. In the UAE, Sharia is, a source of law and recognized as a foundation under the constitution. But when one looks at its actual application within UAE law, within the laws of Dubai and the laws of Abu Dhabi, it's not really so much in the context of commercial transactions. The civil code and the commercial code and other codified pieces of regulation around, the bankruptcy, etc., prevail in that regard. Sharia, however, does have a significant role to play in personal and family affairs. So you see that the point that I'm trying to make here is that unless there is a move forward in codifying the parameters for Islamic financial transactions and actually making these their own standalone laws, then up until the point in time that happens, I think we will continue to see certainly a preference to go with English law, DIFC law, UE law, and normal forums for dispute resolution.
Thank you very much, Mr. Paul. It was very fruitful discussion, very important inputs we shared. The last question, maybe I can take one more again to Miss Yusra. This is your turn, please. How to change the mindset of the people and how to convince them about Islamic banking? What are the challenges we face in this to attract them towards the Islamic banking product? Some customer is still not, they are coming to Islamic banks and believe and prefer conventional banking. Before going to this, my point is there is no any comparing, no any comparison between conventional and Islamic. This is a mindset from the customer's viewpoint, not from the industry viewpoint, to be frank.
Honestly, I can just add one word that in the end, it's a choice. It's a customer choice. And we always give the customers different kind of selections. And that's why there is Islamic, there's conventional, there is multi kind of choices for the customer. He can choose if you want to go to the Islamic, you want to go to the conventional. It's the customer decision in the end. You cannot force the customer what to decide. It's his mindset, what he would like and what his requirements. So we have to, first of all, to look after his requirements and then what he wants as the customers. Does he want to go to the Islamic, that is believe in Islamic products, or he believe that it's all the same as products? So it's a kind of first of all a belief. Second thing is a choice. Third thing is more freedom, and the customer is more free to choose. So it is we cannot force or convince somebody to what to bank. It's his decisions. We are here advisor. We are here to give support and to give all the solution to the customers to make him choose the best for him as per to his requirements. Not to us. It's not for us. It's for the customer. So in the end, it's all around him. His needs, his requirements, what he wants, and what he. In the end, it is what he believes in. So in the end, it matters all the beliefs. And of course, we are the Muslim country. And the halal and haram is so much, it's in depth in everything. So when the customers, he wants to go to something and his belief in that things, so he has to follow his beliefs. I can't force, we can force. The law cannot force. Nobody can force the customer what to choose. It's a choice and he has the freedom to choose to very much his needful and his requirements. And in the end, he have to be more happy, and he also can change. If he was not be happy with his choice, he can choose, and he can also change, because that's why we have multiple for financial institutions. There is the banks, there is offers, there is investment products, there is innovative products, there is different kind of solutions, and Sharia is there to support us, to stand with us, to make it all regularity with the system, with the regularity as well, with the central bank regulations. So we all under the same umbrella. But in the end, the customer, he have to choose what he wants. This is the only thing I can answer.
Thank you very much, Ms. Yusra. Mr. Mufaddal, one question for you. That is the last one. How much, again, coming to the blockchain and fintech, this is a very hot topic today. How much is blockchain expected to transform the banking industry? How does blockchain fit into Islamic finance? Your input, please.
There's no reason why blockchain cannot fit in, because blockchain is merely facilitating a transaction. It's facilitating trade transactions. It is facilitating payment transactions. right? And more importantly, it is all auditable, right? Something which is auditable, something which is traceable. You can trace a transaction, and it brings together a variety of players across various intermediaries. Multiple intermediaries can come together on a single platform and do a transaction. So I think there is nothing non-Sharia compliant about a blockchain. It only facilitates faster transaction. It lowers the transaction cost. It creates trust and reliability. Now, as I said, in the coming days, functionality and trust are going to be the two pillars that is going to determine the advancement of a bank in its field of expertise. How much of trust can you deliver for the customer? How much of functionality can you provide to the customer? How much of ease of doing business? That's going to be then. Blockchain has done it across various channels. I think multiple, it all started with bilateral corridors. Now it's getting onto multilateral corridors across countries, within the country, and you name it. There is no transaction that is not being done on blockchain. It is also facilitating sharing economy. Now, when I say sharing economy, there have been certain entities in the UK. They allowed people to purchase real estate by picking up a particular stake in the real estate, right? You don't want to buy the full property. You can buy a part of it, be a part owner, and enjoy the rental receipts on that. That's very Sharia compliant in nature, right? There is an underlying asset. Now, not everybody can buy that asset in full. For retail investors, like it's a retail sukuk, I get in, but the blockchain ensures that there is traceability of your ownership up to the smallest fraction. That's the beauty of it. So it's very Sharia compliant. And I think in the coming days, we will see a lot of more transactions moving on to that platform.
Thank you very much, Mr. Faddal. Just to conclude, there are 2-3 questions remaining. I just take Mr. Musa again. This is your domain. I will rephrase the questions.
Dr. Sabah, we are on time and
okay.
So
thank you very much for all your interest, your questions. Time already up.
Yeah,
so
because we don't want to extend it.
Yes, that's all.
The conversation will continue. And before letting all of you leave, if all of you can just focus on the camera, I just want to take a picture. Dr. Neil, Dr. Ellen, it will be definitely good. This is just to take a group picture to share it in the social media. So ready, 1, 2, 3. Let me just take a picture. So that's fine. And Zain, if you can just share that we will be having a quick poll for audience to just share their thoughts if it is available. You can release that now. So on behalf of the Institute, we like to thank all of you. Can please vote. People who are there in the call, please share your thoughts. And I like to take this opportunity to thank all of you, Yusra, as well as Musa, Mufaddal, and Paul, and Dr. Sabah for creating the engaging conversation. I like to invite Dr. Neil to share his closing remarks to all the participants in the call.
Thanks, Phoebe. Let me start off by thanking all the participants that joined and listened to this very informative webinar. I must be honest, it was for me an eye-opener because you always understand half this thing. I now realize that I actually understand less than what I thought I understood. So I think I've got some work to go and do. But thank you very much for participating for the panel. Dr. Sabah, please allow me to thank you in person. You were actually brilliant and you managed this whole process very, very well. I'm hoping to see you shortly in our next webinar will hold. I'm sure Phoebe will let you all know when the next webinar is going to be. In any case, thank you very much and enjoy the rest of your day. Thank you. Bye-bye.
Yeah. Thank you, Dr. Neil. I like to thank everyone, all the speakers for taking the time and joining us, and for the pre-webinar discussions which we had, all your inputs. It was really, I like to say my thanks from my heart, and also a lot of questions which came in. And for example, some we addressed, some we couldn't due to the time constraint. Zain, you can end the poll. And we will be having, because summer months, July, August, we may not be having a comparatively webinar sessions will be on a recess. We will be starting it again in September, October, November. Feel free, kindly connect us through social media channels so that you know about the programs. And thanks again for taking time today. and joining us. And stay safe, stay well. If you are traveling, be cautious and take extreme care. On
Thank
behalf
you very
of the
much all.
Institute, thank you. Dr.
Thank you.
Sabha, any closing remarks?
No, that's all. I can't take all questions. So this is the time issue. All participants, their contribution was great. Thank you very much all.
Thank you. So we are closing the